Hey guys, Jack here. Stick around after today's episode to hear how new clients can save 50% on AgYield's full suite of consulting and technology for 2025. This exclusive offer is available now until April 1st. Don't miss out. Terms and conditions apply. Check out the video description to learn more.
Good morning, everybody. It's Monday, February 10th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you get any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets here at March corn unchanged at 487.5. March soybeans were down 2.5 at 1047. And March Chicago wheat was up a penny at 583 3/4. This morning we had an export sales announcement of 365,000 metric tons of corn to Mexico. This was for 24-25. Also, we are through 5 of 19 days settlements for the spring crop insurance discovery period. Corn is currently 467.5, while soybeans are 1064.5. Good morning, guys. Hope everybody had a nice weekend in spite of that pretty uneventful, not that fun Super Bowl, depending on who you're cheering for. Anyway, we're done with that, and moving on to a busy week in our markets. We're going to have a USDA report out tomorrow, and as we've been talking about a number of times, after through the end of this week, we'll be halfway through setting our crop insurance price for the spring, which is going to be pretty key there. So, Dustin, maybe a few thoughts to kick us off here this morning, and we'll throw it around the room.
Yeah, good morning, Dan. Yeah, we had overnight markets start out a little bit lower. A lot of people talking about just some more favorable weather coming in for South America. I still think it's a little bit late for Argentine weather to get really excited about a huge yield comeback right now. We are expecting a below trend line yield right now. I think the market has priced some of that in. Now, Brazilian planting, is catching up quite fast. So that's one positive thing for the market, which is obviously negative price action. But we saw funds very long, and they built more length going into last week, as we saw on corn. What's going to get them out is the question. Justin's talked about this at length. Unless there's a reason for them to really kind of change course, some sort of new geopolitical development, all of the threats of trade wars we think should be discounted into the market to some degree. Now, if it turns for the worst and it gets into a much deeper, broader trade war than we expected, the market obviously won't take kindly to that. But I think there's a reason we've gotten to this point, and like I said, let the chips fall where they may a little bit. We've got a certain amount of the crop insurance price established now. Hopefully, they can continue to get supported prices through the rest of the month, and let's just see where it goes at that point.
Yeah, it's going to be interesting. Yesterday, ahead of the Super Bowl, Trump announced the 25% tariffs on all imports of steel and aluminum, supposed to take effect sometime this week. So his rhetoric is still certainly very high on tariffs, in spite of the pause that we had from Canada and Mexico. And I don't think we've had any real announcements out of his discussions with China or even discussions at this point. So be interesting to see that. Ben, what are your thoughts here as we come into obviously report tomorrow and all things ag?
Day 2 of the Goldman Roll is today. That's when the index funds roll their longs out of the front month, and then they roll it to some further down the strip months. You don't know if they're going to go fully to May or July, or potentially at this point, I'm sure there's some that may even be considering rolling to Ds. So that has a mechanical effect on the market. We've seen March, May move out a little bit past couple sessions, and not uncommon for us to back off just a little bit into this roll period. I don't want to be an alarmist, but I always am a little bit jaded on rolls, particularly this time of the year. With a big report tomorrow, people kind of front run that roll, looking to get out on the other side, and it looks nice and rosy today. Corn's a pretty deep market, so maybe it's a little less immune to some shenanigans if the report were to come out and be a surprise. It's kind of watching that. And I think you have to have your head a little bit on a swivel for things that the president does. He's supposed to sign some more executive orders later today. Anyone's guess as to what that will be. But in the end, the fundamental makeup of corn is that we're the cheapest corn in the world. We continue to do good business. We had a nice flash sale this morning. And we're the primary destination to purchase corn for at least the next 2 months. So, looking out over the horizon, very well prescribed to the trade that we're going to have big corn acres. That seems to be the general feeling. Maybe a little bit more neutral around our camp. But old crop has got a story, and I think that we see corn doesn't necessarily have to go fishing to find demand. It's finding it here. We saw that this morning. We're shipping a good amount, and I think it's going to be. I'm not going to say that the short won't get paid eventually, but I think they're going to have to need more than what we have today. I think that the long is firmly in control of these markets. So
very good. And like I said, I know we'll take a look at tomorrow's report. It'll be at 11 o'clock Central, and we'll certainly go there. I think, Dustin, real quick, I think the big numbers to watch, certainly are just a continued drawdown in stocks, right? I mean, any thoughts there with our continue to do good corn business? I mean, it would be pretty obvious that we probably write it down a little bit, right?
Yeah, I believe that's going to be your main. You still got July D's corn at 38 over, right? Like, there's definitely an assumption there that we're going to be approaching some sort of tightness built into U.S. numbers. That still encompasses competition with Brazilian corn at that point.
Yeah, and to that point too, you referenced South America. The estimates, average guess estimates, do have the USDA starting to make a revision downward to the tune of call it 1.5 in Argentina on the bean side. They've actually, the average guess on the estimates, which is interesting for Brazilian beans, is a little higher than January. And then you've got a little lower in Brazilian corn and about call it 2 or so lower on Argentine corn. So more Argentine revisions downward really than where we've been.
Yeah, I think that all makes sense because that's like if you just take like a weather tracking yield based model, there's below trendline yields projected. But if you're talking about U.S. carryout, it was a big surprise to see the January numbers. That included some lower stocks, but they did a major yield revision lower, and that cut carryout down to that 1.54 billion for U.S. corn carryout September 1, 2025 projected. So they've got average guesses running 1.47 to 1.590. Even before we got that cut, spreads were trading toward that level, right? We already had July D quite inverted going into the report, and then of course it shot up after, we made those assumptions. We've only had really good, like today, for example, more large sales to Mexico. So I feel like there's a good chance that the trade estimates have this pegged correctly, that it should be just a little bit lower from a higher demand outlay. They shouldn't change much other than just demand estimates at this point.
Yeah, very good. Ben, what should you something to add?
Yeah, just a couple side notes, just kind of looking at some of the mechanical features in the market. I thought the COT was pretty interesting. We saw the managed money short cover some last week. The long that's there, we typically talk in terms of net for managed position. The net is adding up the long and the short, and the short's still short about 84,000. The long is at a record. The net is still below records.
What market are you prefacing now? Real quick?
Corn.
Okay.
So last week we saw managers cover shorts and very little new buying on the long, but they are at records. And we've had the discussion on here is, is this a long that will grow from here? And I think that's something that's really worth having an open mind to. Maybe it doesn't happen, right? Maybe they don't want to allocate resources to that. And then in wheat, I think the COT is particularly interesting. Still short 90,000. They bought last week, covered about 20,000, and that was shorts covering again. I think that wheat is at a time of the year and at a place where in the feed grain category where we could get really squirrely over the next couple months. So.
Well, very good. We got a couple minutes coming in here to the open. Ryland slaughter a little lower than expected in the livestock, and kind of interesting to see the front end of hogs leading the way, certainly in here through February. But what are your thoughts as we start the week?
Yeah, I was kind of an interesting trade. I mean, the cattle market just kind of paused. It's been just a straight down kind of market here. We actually did see open interest go down quite a bit. I think that's normal ahead of first notice day. But on the other hand, we saw commitment to traders show that the funds sold 6,500 contracts. So I think there's a little bit of concern. We've seen the cash market start to trade lower. We've seen beef prices really take a tumble here, which I think a lot of people didn't really expect, especially as we're seeing those kills get cut. So a lot of questions how this week's going to shape up with kind of all that information. So the real focus is going to be on beef performance, I think, at this rate. Overall. So I think that's all we're going to watch. We wouldn't expect a lot of cash trade kind of early on, and that's going to be kind of the determining factor here, just on a packer margin kind of basis. Is cash going to be able to keep on going lower here, or are we going to have to see bigger and bigger cuts in the kill? So we'll see how it all goes, but generally, kind of wouldn't be surprised to see kind of a whipsaw trade here today. But yeah, on the hog side of things, I mean, obviously it's been cash-led kind of rally here. Demand has been really strong. I think at this point, everybody's kind of expecting demand to still stay relatively firm, especially on the cutout. Bellies were up another $7 on Friday. Carcass was up $1.30. So we are still seeing that optimism here and demand from the pork side of the market. Managed money is back to buying again. They bought 3,300 contracts the previous week. So overall, they're still building back in, and they are carrying a pretty hefty long position, which I would say is probably a risk, especially if we start to get some more inflammatory headlines with our trading partners. So, but overall, right now, it just feels like we're trading kind of seasonally firm, holding these big premiums to last year. So overall, it just seems pretty good right now. So just watching cash.
Very good. Appreciate the update, and anything that changes will certainly be there to update everybody. A couple things to point out. We've referenced it a couple of times. USDA report will be out there tomorrow morning, 11 o'clock Central. So we'll take a look at the report and certainly have our reaction to that report. Also, we've talked about it a number of times. I know Jack will have a little more information in the outro, but we are running a real special offer to new clients here to come on board with AgYield. But, before all that, give us a call. You got crop insurance decisions. We've talked a lot about that on the show. Very important, given these levels, some of the new policies that are out and how they can fit in real nicely into your marketing for the year. So just give us a call, take a look and see what we got to offer, and we can talk through your individual operation. We'd be more than happy to do so. Appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like and certainly subscribe. It'll keep you up to speed on everything that's going on with AgYield. And so again, thanks to everybody that supports the show. We're doing this live every day that the markets are open on X, Facebook Live, and YouTube Live, 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a good show. Hope everybody has a good start to the week, and we look forward to talking to you again tomorrow.
At AgYield, we know that farmers are constantly confronted by new challenges, and 2025 is no exception. Markets are volatile, margins are shrinking, and lender confidence is in free fall. Farmers need industry support now more than ever, which is why we are offering something truly unprecedented. From now until April 1st, new AgYield clients can access our full suite of consulting services and cutting-edge technology at 50% off. This is more than a promotion. It's our way of extending a hand of support to farmers when they need it most. From precision grain marketing to innovative risk management strategies, we're committed to protecting your farm's profitability and building a stronger, more sustainable future. And together, we can weather the storm ahead. Visit us today at agyield.com or call 855-266-6241 to get started. Terms and conditions apply. Check out the video description to learn more.